One of the interesting questions from IG clients in the last few weeks is why the DAX is doing so well as the German economy falters. Fourth quarter GDP came in with a 0.3% contraction. IG's analyst in Frankfurt is Salah-Eddine Bouhmidi, who joins us now. Just explain more about what's going on. Germany was the engine house of the Eurozone for so long, and it's now showing signs of extreme fatigue, but money is still going into the DAX. Tell us more about what's been happening in your conversations with clients to reassure them about the DAX performance.
Yeah, they are happy, of course, Jeremy, about the performance, but they have concerns from macroeconomic perspectives, which are, of course, which I agree in. If we look on the GDP data that you said, following yesterday's announcement, we see a second negative quarter in a row, which is technically speaking, from an economic perspective, a recession. Looking at the labor market, we see a slight upward trend in the unemployment rate, which has slowly risen from 5% in 2022 to almost now 5.8%. Equally in the US or in UK, we see an uptrend in employment, the unemployment rate. So this is a hint for the labor market. And even today, we see inflation fall slightly on an annual basis in December. We are seeing slightly increase on monthly basis. This confirms my view that inflation will not quickly reach the ECB target. We can see that life, and this is what you actually mentioned, I talk to clients, we can see that life in Germany is more expensive, and people are noticing this particularly when it comes to price of food. I see geopolitical uncertainties and crop failures as potential drivers of inflation at the moment, which are hampering the rapid decline in inflation. And this is what I think, from a macroeconomic perspective, gives us some negative balance, even though markets are upward trending. And this has also reasons in technical approaches, if we talk about this later.
Absolutely. Let's bring up a chart of the German DAX. So it's a chart we know so well. And as I said at the top, I mean, you're getting it as well. IG clients really wanting to sort of dig deeper into what's going on. What about the breadth of the gains that we've seen? What stocks are making up this? We hear so much in the States about the big seven technology companies making up so much ground on the big indices. What about the spread across the German DAX?
Yeah, we see actually really good market breadth, which is confirming the uptrend and the new all-time highs. DAX is currently in a good shape. 26 out of the 40 DAX members are trending above the 200-day moving average. The RSI is bullish. I'm looking on a critical level of 48%. Or level, which is a bullish confirmation for me. We are far away from that, which is positive. But however, Jeremy, if we look on volatility, especially on the VDAX new, he is trending at a low level and above the 50-day moving average. And if the VDAX new or the volatility indices are trending above a 50-day moving average, there we might expect higher volatility in the upcoming days or months, weeks, and this could even tell us that we might get into a correction. But I have also some seasonal clues that might confirm another perspective.
Okay, well, let's take a look at that other perspective and ask you from a technical point of view. And again, it's a question which we're getting from a lot of clients. How far up does the DAX go before we get a turnaround? What is the potential upside and how are you measuring this?
I have two approaches. On a short-term view, on an intraday or maybe swing trader view, I see potential till almost 17,100. I have my own indicator, Bouhmidi bands, an implied volatility indicator, estimating the next bandwidth, which is almost at 17,100 points, which means this would be a new all-time high. Going further, we might see in the first half of the year 17,500 as a next upper target. But of course, if we look on the technical downside, we need to defend 16,800 points. This is a really important support level, not only nowadays, it was almost the last 18 months a really important support that we need to take over and to hold and defend to take this rally to the upside.
Let me just wrap this with one final question. In the context of the Eurozone, as I said, Germany was known as the really big engine house behind the big gains across the Eurozone. And the European Central Bank knew this. And they knew in order to make sure the German economy was firing on all cylinders, interest rates on the whole had to be lower than Germany needed it over the years, the decades that we've seen the Eurozone founded. How important is it that we get the ECB cutting interest rates soon in order to sustain the money going into the DAX? Is there a link between the ECB and what investors are feeling about the German market?
Yeah, definitely, Jeremy. And this is what we can see as well in the charts. If ECB is talking on monetary policy, announcements on use is spreading into the market. But of course, cutting the rates would definitely help not only Germany, but on the other side, as I mentioned before, what about inflation? The drivers for inflation as a forecast, there are some drivers that might push inflation higher or even let inflation on that area that we are now. So it's a really difficult game for the ECB to hold and maintain, or even actually to improve our economical conditions.
Okay, interesting story. We'll keep a note on what's happening, and thanks for your time. We'll doubtless catch up with you later on in the year as well to see how things are going in terms of some of those moves. But in the meantime, thanks very much indeed. That's Salah-Eddine Bouhmidi, who is our analyst in Frankfurt, taking a look at the German DAX and what's behind the recent move up to record highs.